welcome back. Just after 3 p.m., June 12th. Markets are boring, and I'm going to with it. That's what the theme is for today. We started out a little bit lower today, around 6005. We have melted up to around 6042, not above yesterday's high. Here's a look at the markets. We had yesterday's highs around 6060, 6059, and ended up dumping towards the end of the day towards around 6002. We ended up opening today just a little bit lower. Here's 6009, and like I said, little push down to 6003, melt up a little bit towards the 6045 handle. We talked about this morning in the daily profit play. Kind of a high volatility cluster around 6040, 6050 area. Potentially, range bound between 6,000 and 6050. That's essentially what we have. I ended up taking a small loss on daily profit play just because we did have a bit of a directional move. This is 1, 2, 3, 4, 5 candles in a row. I mean, essentially have an hour of a bullish price action, which doesn't seem like a lot, but it's persistent enough that in a 0-day environment, it did cause a little bit of risk on the upside of my trade. So I ended up taking a small loss, and I've got it made up. I'm going to be finishing about $60 positive on the day for some 0DTs with a bull call combo. I did like a 6,000 and a 59.95 bull put spreads that I collected $1 on. So I'll end up making some profit just in the 0DT space. Some new trades in the day. My pinch point scanner, we had another nice winner today, closed out MRK for a 31%er. So this is MRK right here. We got in for a little debit spread and ended up hitting the 30% level. I want to go after 50%, but it was one of the more expensive debits. It was like $430, and so I just went ahead and closed it out for $130 profit, which I'm okay with. That was a nice win. We have 3 other winners that all hit 50% take profits. We added some new trades today. RKT was a new traded pinch point scanner today. That's already starting to run, and also SCW, a little Schwab activity. So this is Charles Schwab, the investment company. So we'll see if their trading activity, their assets under management, the outlook on trader optimism and fees and everything else. We'll see how that looks. So I think that this next, also I added a trade. This is a different service, but my Project Options Edge, I added a trade on Robinhood today. I added a trade on Pepsi today. And I added a trade on, what was the other one? Progressive PGR right there. So Pepsi, PGR, Robinhood for Project Options Edge, Rocket, and Schwab for pinch point scanner, and closed out MRK for a winner. Also did some pruning in the portfolio. Tesla rolled some calls out to July 3rd. Silver, I've got a diagonal spread that still has a couple dollars more upside. I could maximize that profit if we get to $34 call side. TLT, I've got a diagonal spread with a call side at, or the sell call rather. The sell call is at 89 on TLT, and the sell call side is 34 on SLV. So a little bit of pruning there in the next few days. Some of these expirations were this Friday, the 12th. Next Friday will be the 20th, and just ended up grabbing some of the profit, rolling those covered calls to add some additional income. So if you're out there, say what's happening. Happy Thursday. Markets have been pretty chill this week, to be honest. I mean, here is the look for my levels today. So I mean, if we were above this is my bull call spread combo that I have running. So if it's above 6,000 or above 59.95, that looks pretty good. My call side, I did, like I said, because we had that 1 hour of direction, I did take a small loss here. It wasn't big. It was like a 30-cent loss and a 70-cent loss. Wasn't a big deal. But it's fine. And then tomorrow's a new day, so we'll see. But we are still for the week. I'm trying to think on the profit this week. So what day did it start here? The 9th? The 9th. So 10 to 15. So we have 6 trades running. Is that right? 1, 2, 3, 4, 5, 6. Yeah. So net positive on the week. And tomorrow, new day. We'll see if we get directional or not. No major news coming tomorrow from what I can tell. Next week, it's a little bit more interesting. I don't think that June is really going to be anything other than a melt up. I just want traders to be on the lookout for a potential fall back to 59.05. I keep mentioning that. That's a big hedge level and a big resistance level that the market had like starting in Q2, which would have been April 1. And I wouldn't be shocked to see the market actually drop back down towards it. So, we're melting up. We're at 60.41. Do we have a bit of a thrust through the Fed next week to get us up into all-time highs? Does the market get disappointed first and then still rally through the month of July? There's a bit of seasonality question marks here. What we hit, all-time highs first and then fall back, or we fall back first and then still rally to all-time highs. Either way, like I sound like a broken record here, but for the last month or so, you know, any decent amount of pulling back, I'm going to start positioning for trades. So, I mean, this melt up just this week has brought my portfolio up probably another close to $40,000. So I like it. I'm participating in it. I'm letting things just continue to work. I'm sitting on a lot of cash to deploy. That is by design. I'm sitting around 50% cash right now, which is okay. I did allocate some today with Robinhood, Progressive, and Pepsi. If we have dips and pullbacks, I will probably deploy another 5 or 10% cash, maybe more, depends on how good things look. But up to 41 trades on the day. This is pretty typical. When I find some activity, anywhere between 30, 40, 50 trades in a day is not hard when you're managing accounts. So anyway, we'll see. But whether we go up to hit highs first and then fall back, I wrote this in the notes yesterday. End of June 59.05 is an end of month, end of quarter. This would be a big resistance level by the JPM. This is JP Morgan investment firm. So they always have like a quarterly, roughly between a 10 and 20 delta resistance level. And that tends to be where a lot of hedging is going on, a lot of order flows and liquidity is sitting. So either this market has been hedged against it the entire time, or usually this acts as a way to still keep this finishing out of the money, which the same thing happened back in March. The market was down here, bounced up, and it stayed above 56. I think we stayed above like 50. It was 55.65. Yeah, it was 55.65, and we did end up finishing the month above that level. So it does tend to respond. It could be late in the expiration cycle. So this could take us, all the way to the end of the month, which is going to be a Monday. So just be something to be mindful of here as we close out the month in a couple of weeks. All right. All right, cool. So pinch point scanner. Had a live class today, 1:30 p.m. That recording should be posted in a couple of hours. Let me see if I can get that pulled, actually. I'll check and see pinch point live session today and all classes from the past 2.5 weeks. Are they posted in the classroom? Okay, just going to confirm that those recordings are available. Stocks, if you want to take a free whack at my watch list here, here is what is primed and ready to go. So some of these stocks have already started to move. Rocket, for example, is already up $1, but I'm still participating. Pepsi is sitting at a good level, so I did a ratio spread. Schwab, I put in a trade. We priced a lot of these out this week. We are in, I believe some of these are already in. So COHR, I'm in that trade. GO, I'm in that trade. SEIC, I'm in that trade. ULS, I'm in that trade. Actually, no, ULS, I'm not in yet. I didn't get filled there. This is still a credit spread that did not get executed. So ULS, not in. SEIC, not in. Those are pending orders that have not been filled. So what else? COHR is in. Palantir is in. HPE in. NWS in. CELH in. SoFi in. RARE. This one's a credit spread. It's actually well above my strike prices, and this was actually looking good for a pretty good profit. Let's see here. I guess technically I could adjust that take profit. 235 credit. I should be going after like $1.20 or $1.15 debit on that one to take a 50%, but I'll revisit that one. That's a mid-July. KMI, we cut that one off for a small loss. NWSA, GNRC, HTGC, KView, Starbucks, DJT, that's Truth Social, and Verizon. So we're monitoring about 24 trades. That's what I love about the pinch point scanner is in the last 2.5 weeks, I found some really good opportunities on 24 setups. So this is an idea generator for me. I just have to take the scan, go to the option chain, price it out. Do I like it? Does it give me a good chance to make a 1-to-1 or better? And then hit my take profits. Usually I'm going out about 40 to 50 to 60 days on some of these trades. I do think that things are going to get a little bit more exciting. That's why I posted this picture here. Markets are boring. I'm 100% okay with it, but don't be surprised. I posted this in Telegram here. If you're not, you should be. Like, be happy with the boring melt up. I know some things might seem a little bit less exciting, but we're going to have a shakeup at some point. I mean, volatility has been in fact, it's the largest drop in volatility in the shortest amount of time. So we had a huge spike up. This was like the third or fourth largest VIX move ever. And this is the first largest and fastest crush in volatility ever. Not a huge surprise, just because it's modern day markets and things move faster. But I would say that right here, sitting around 17, 16 VIX, it wouldn't take much to spike this thing back up into the 20s again. It wouldn't take much to shake things up a little bit, like having a correction in the markets by 3 to 5%, maybe 5 to 10%. Just for something to shake it up. I mean, maybe it's Trump, maybe it's the Fed, maybe it's geopolitical conflict. I don't know. It could be a bunch of things that are all out there swirling in the news right now. The hard part about like a black swan event is nobody knows what it is. But I don't think a black swan event is necessarily now, unless something terrible happens with the U.S. bond market or something terrible happens with the dollar. Speaking of dollar, we did break some fresh lows today. Be cautious of the dollar lows. Be cautious of the dollar lows because there's some divergence down here. So bears are making new lows. I'll show you on this chart. I have a kind of a divergence-based workspace. So here's harmonics and pivots, and I've actually got it up already. We talked about it this morning. So this is the weekly time frame. Okay, I know there's a bunch of garbage on my chart, but this is a weekly time frame, right? So we're hitting some fresh lows on the weekly chart. We also see some slight bullish divergence on the RSI. And we are just at these lows. I mean, you look at this momentum oscillator. When we hit, this kind of same low, the market bottomed, right? When the market came back to test the lows again, that was the divergence, and we came back up again. So I wouldn't be surprised if we start to see a turn on the dollar. This could also be a bit of a risk-off play if the dollar gets a bid. Maybe the yen, the Swiss, the dollar get a little bit stronger. Maybe it's just a recovery on the dollar. Maybe it's more range-bound. But with oversold conditions, I would be cautious of selling these lows. I think this is a bear trap. So just my PSA is just be careful selling lows on the dollar. I did close out my trade. I can go to a different workspace here. I did close out my trade on the euro dollar yesterday. I did this in session. I closed out right around 1500. I thought it was good enough, and so I took about 300 pips of profit on the euro dollar. I canceled my other positions that were pending orders at the 108.50 and 106.50. So all in all, it was a win. I mean, here's my entry and here's my exit. So I mean, all in all, it was a good win for 300 pips. I'll take it. But today we end up spiking up above 1600. That was another 100 pips of profit. So if I just left my 1550 target, it was actually hit, and that was kind of the point, was hit this high, spike this high, maybe see if the dollar taps that low and is a bear trap. That would have been about 350 pips of profit. So it's all good. I mean, I'll take 300 pips, and I've been watching it closely. It's better to be out with some profit. Now, for the dollar index, I would say keep an eye on this recent activity, because if this is in fact a kind of a bull trap, this market might chop around a little bit here. I guess I can just draw this. This market can chop around a little bit here and then start to break lower and come back down into where we started. That would be a range trade on the DXY. That'd be a range trade on the euro dollar. If you're looking for confirmation, if we confirm on the right hand side of the trend line, stop loss above the highs, and possibly get a nice little 2-to-1 reward to risk, wouldn't be a bad setup. Right? Profit target 1. If we go lower than that, this little cluster would be profit 2, trailing stop losses, making sure that we're trapping profit along the way. I wouldn't get super greedy if you're looking for a euro dollar short. I'd want confirmation first, which we don't have yet, but I'd be watching. Okay. All right. What else is going down here? Okay. Vimeo. Got it. Okay. Any questions on that? Oklo. Oh, baby. Chasing some nuclear. Oklo had a big old rip. What'd you do here? Oklo. So 2 Oklo 100. So what are you doing? I mean, 100. What are you doing? I'm having a hard time deciphering your message there. Are you doing a put, like a credit spread? 44 put? I mean, I wouldn't mind. I mean, this in the nuclear space is probably looking pretty good. I don't mind if I can get something here that's pretty solid. Maybe I mean, a ratio spread at 17 seems a little out of sorts, but even pulling into a gap area at like 35, maybe. I don't know. Let me take a look at it. This one's been high flying. I'm just not chasing like crazy rips up. Sold the 44 put. Got it. Okay. So I'm going to take a look here. Maybe going out a little bit lower, like a 35, trying to build a ratio spread in this gap area. If this thing were to top out a little bit, um, maybe back in like the 35 and 32 zone, I wouldn't mind taking some shares of Oklo if I could buy the dip. Let me price this one out. So August to September, let's see what it pays. I mean, honestly, the premiums are pretty decent. So if I did like a 35, so the premium falls off quite a bit at 35. Maybe I do a 36 by 35. Let's do like a 30. Let's do a 40 by 38. So I can, own the shares at 38, quickly repair it. What's a 30-day covered call if I got assigned? Wow, sheesh, $8 for a covered call. I mean, even if it's $4, if the stock falls and it's a $4 to $5 credit, man, Ivy is going to be a lot higher. So for August 15th, that's not going out that far. 40. I mean, I might just either one. I take this trade for income. It's a pretty good probability, like 86%, which that's a little lower than I'd like. I would still be willing to take the shares. Turn chat on, please. The chat is on, William. The chat's always on in these live sessions. You can type messages in YouTube. You can send messages. I've got 2 YouTube channels I stream to. You can post comments on my Facebook or LinkedIn or whatever I'm on. So these sessions I push out to like 5 channels. Chat's on, man. All right, 40 by 38 going out 64 days. Let's go out a little bit farther. Maybe end of the year. Still got pretty good spreads. 35 by 30. $1.17, 5 wide. Would I own shares of Oklo at $30? Yeah, that's a gap fill. If I want to make more income, then I just move this buy level down, like right there. That's a good trade. This is going to be another income trade for me. 227. Probably. I mean, honestly, this is cheap enough that I can trade this with everybody. So I'm going to get this filled for all accounts here. Let's take some of this activity for everybody. Yeah, so everyone's going to get in on the action here. So I'm going to see if I can get 230 out of this trade, maybe 225, just below the mid price. I'm going to do a 32 by 30 out to December on Oklo. If I took the assignment, I'd own it at 30 minus, so 30 minus 2 minus 2.30, roughly 25 bucks would be my ownership price. 25 bucks, that's a pretty good move. We'd have to fall, 65%, and this thing is ripping higher. So I think this is a good trade. It's surprising that the percent profit here is only 83%. Obviously, the stock has probably moved aggressively higher. I would assume more than 1 to 2. I mean, it might be like a 2 to 3 standard deviation move, but the IV is relatively high. So anyway, I like the trade. Let me see if I can get 230 for this one. $230 is not filling. I'll go 228 mid. Not filling. 225 mid. If I'm making over 200 bucks on this one, I'd still take it. So 224. I'll chase this down a little bit. 223. Okay, I'll go just below the mid price at 220. Come on now. 219. This is 3 cents below the mid. Still not filling. 218. Crikey. 215. You've got to be kidding me. 210. Are people taking my order? What the heck? 205. 205 got filled. Okay, now we're in business. 205 got filled. Next. Getting filled at 205. All right, I'm going to quickly run through these and get these filled for everybody. Okay. We'll go this one. Okay, so some of these are pending. I might massage these a little bit since some are filled, some are not. All right, so I got a lot of working orders here. I'm going to go down to like 204. $2. Hopefully $2 filled. Oh, I'm going to keep it at $2. All right, getting filled at $2. This one here for $2. Getting filled. All right, all these getting filled at least at $2. Okay, this one's going into Project Options Edge as far as service trade goes. And I think I've got 2 more to get filled. All right. $2. All right, so everyone got filled there. $2 is the credit. Got it. All right, let's get this one in Telegram. I'm going to dot this guy up. This will be a $30. So anything to the upside is good. Any risk would be owning the shares around like $26 or $27. So that's what my risk reward looks like. 32 by 30. All right, so let's get this one priced out. Project Options Edge, new trade. Oklo going out to December 19th expiration. Buying the 32 put. Selling the 30 put. Collecting $2 credit. Ratio spread and willing to own shares of OKLO if price is less than $30. I can heart that too. $30 by expiration. Break even price would be, or will be rather. So if I was assigned, get assigned at 30 minus 2 minus $2 would be a $26 break even. Okay, so that trade is in. 12/19 expiration. Buy the 32 put. Sell the 30 put. $2 credit. If assigned, break even will be 26 bucks. And I will repair that. Okay. So that's in. Little bonus trade out there today. I like it. It's been a high flyer. Baja Pete beat me to it, but I priced it out a little bit differently, so I'm going for the lower strikes and hopefully making a couple $100 on it. Okay, that's Oklo. Let's see here. What else? That's a big mover. Let's go back to indexes for a second. Let's do currency strength. Dollar was the weakest today. That 59.05, end of month, end of quarter. Just be aware of that. I just wouldn't be surprised if something happens where the market's shaken up a little bit by the end of the month. It could be, FOMC pushes things a little bit higher and then we fade by the end of the month. It could be we get shaken out, next week with the Fed and then the market buys the dip, or it ends up being a correction into, sub 59, maybe 58, maybe 57, maybe a pullback here, but then we buy the dip and still get to all-time highs. Okay. What else? Currency strength right here. What's going on? So today, Swiss is on top. Euro, yen. Baseline is New Zealand, CAD, Aussie, pound, dollar is the weakest. A little bit more volatility on the vertical axis. We got dollar weakest today, Swiss on top. What's it look like currency pair wise? Yep, pull back on the dollar Swiss. Trend line still hasn't broken. Trying to get this thing back into this like 90 or this like 87 to 88 handle. I do have another order down here around 80, 75 for a little add in, and then I'm waiting to add some more buy stop levels on the right side of this trend line. Next week will be fun. I'm in a trading battle during Wednesday's FOMC. If you'd like to join, I'll post details in my Discord channel. You'll see it on YouTube. It's hosted by ACAP, Nick Sayek, and A1 Trading. I'll be hosting. I think I'm facing off against Blake Morrow, a good buddy of mine at FOREX and Trading Analytics. So we'll have a lot of fun there. That'll be next Wednesday. It's good for some currencies. What else you want to take a look at today? Let's take a look at the heat map. Let's go heat map. So FinViz. 54% of stocks advancing, 42.6 declining. No major movers. Boeing is down. I saw about 5% today. Not sure why. It's still higher than where I bought it. So, I bought some Boeing back at like 130-ish. I think like the 140 or 145 level. I was out in this first bout here. This was, I bought back here around like the 145 zone, and I dumped this thing around 185. Came back down to retest. It would have been a nice chance to buy it. I was looking for the yellow zone that didn't quite get hit. That was the bottom in April. But wow, what a rip, huh? Just like everything else from April to now, it's like the stock's up, 70%. So it wasn't a big one. I put like a couple $1,000 at it. It was up, 30, 40%. So, but Boeing is down today. I'm not sure what the news is, if anything. Nearing to deal with Royal Air, multiple jets, likely including, faces increased scrutiny after January 24 fuselage blowout. They're always getting some bad news out there. Okay, what else on the heat map? Mag 7 hanging in there. Oracle, big move on Oracle, up 13. Wow, that's a big move on Oracle. Son of a biscuit. I wanted to take something here with the earnings this week. We had earnings on Oracle. It came out last night, so it would have been after close yesterday, and that seems like a pretty good pop. It's up $20. I could look at the pricing, but that's a decent move to the upside. I just think it was 5 wide on the option strikes, which is why I didn't trade it. But pretty decent pop to the upside. My ratio spread back here was profitable, so I'll take that. Anything else standing out today? Insurance, I put in a new trade in Progressive. Insurance has bounced back a little bit today. Coinbase is down 3.4%. Financials down a little bit today. Oracle's way up. Microsoft is just sitting around those all-time highs. Microsoft is at all-time highs. Lots of overbought conditions, though. Be on the lookout for this. Okay. Be on the lookout for this with mags. I mean, obviously anything can happen here. Maybe we just keep melting up. Maybe mags gets all the way back to the highs. But I wouldn't be terribly surprised if, what was the stat that I read here? Something to the effect of the amount of concentration that's still in the Mag 7 is just, it's pretty preposterous. So, I mean, this could blow the tops off and still go higher. But if this world is trying to rotate out of mags and back into cheaper value plays like the Eurozone, like China, like non-US related assets that have been performing better, there's still that potential, rotation. It happened. I mean, that's what this was in March and April. Basically the rotation started and then it was exploded with Trump's comments and the trade war. But quickly we pivoted hard into, now we're going to grow our way through this fiscal cliff type thing. We're going to try to pass this tax bill. Sarah, I talked about that earlier. I don't think the dollar is going to go too much lower. I would just be cautious on. I'm not selling the dollar. Like at this point, I'm looking for a turn on the dollar. I'm looking for maybe a turn on the euro dollar, some confirmation. I wouldn't be selling the dollar. There's too many good divergent signs on my daily and weekly charts that would show the dollar's likely going to be a fake out. I think the dollars is a low. I think the dollar's like hitting lows, divergence. We'll probably pivot off these levels and then maybe range back up to like 101 or 102. So I'm not selling the dollar. So if you're watching dollar, Aussie dollar is not really moving super high. It's mostly the pound, right? It's mostly euro dollar and pound dollar. Euro dollar is up, poke the 1600 handle today, probably because there were stops sitting above it. Here's the pound dollar still climbing to highs. Here's the Kiwi dollar just still climbing to highs, but it's just been a slow mover. Dollar CAD selling a little bit off still. I'm not short. I was short dollar CAD over here on the 4,400. I was long dollar CAD from 35 all the way to 45. So now I'm just waiting to see if this settles in around 34, 3,300, and I'll see if there's some inefficiencies. But even a good trade like this, I mean, if we were able to get some dollar CAD down here, position for a trade back up into the middle, I still like that trade. I don't have to go all the way to 45, but even if this was my profit target, lining up for like a 5 to 600 pip range, I wouldn't mind taking that support. So I'm just going to sit and wait. If you want to draw a trend line here on dollar CAD, pretty simple. We get on the right-hand side of this trend line, dollar CAD looks like a buy to me. So until then, if you want to sell it, I mean, this is up to you. You want to sell dollar CAD, profit targets down here, stop loss would just be above the trend line. So this isn't where you sell it and say that's a great entry. This is like area 1, you pull back to the trend line, area 2, stop loss, you stay above the moving averages and just make sure price cooperates. But it's like there's still some pressure to go lower. Oil, see if oil is popping up back above that 65 handle. Kind of. So we're back up to the 200 moving average on oil. We're at 68.10. I think this has some potential consequences towards inflation. If we have higher oil prices, higher energy prices, I think that you're going to start to see that trueflation real-time number tick up. I think you're going to see data this summer that probably spells out higher inflation if higher energy costs are happening. Copper, I'm actually sitting up a couple bucks in this trade. I'm trying to get like a lottery pick here for about a $1,400 winner. Maybe that could be extremely lucky, but we'll see what happens. Let's go non-US here. So this is Swiss franc. This is Japanese yen. The Nikkei. I'm long EWJ. This is the DAX. We pulled off the highs a little bit. Here's a simple fib. So if we get a pullback towards like the 30 to 38%, it doesn't take much on the DAX, but if we pull back like 30 to 38%, we're probably going to come back and retest the highs. So if we get like a 38 to 50%, same thing. I think we could come back and retest the highs. So I would like to see kind of the end of this little melt up, that this market just kind of rolls over a little bit, offers a correction, and then see if there's some smart money that's willing to buy the dip. FTSE just off the all-time highs. It's so close. Same thing. We maybe poke the all-time highs, maybe fall back a little bit, have some accumulation down here to restart, and see if we can get like a reasonable pullback. Argentina, maybe a 200 moving average test. China, I mean, China's come up a decent amount since June. I mean, we've had like a pretty good upside move on China. Let's see how this is translating to other stocks. Brazil, hopefully we'll crack some fresh highs on Brazil on EWZ, and I'm long ILF, which is Latin America. Same thing here. So do we crack some highs? Mags, I'm just going to wait, see if we have a pullback. Apple, nothing too exciting. Amazon, nothing too exciting. Maybe just a slow grind to the upside to get to all-time highs again. Broadcom, pull back from the highs. I don't know, backfill some of this stuff. This was up like 90%. I mean, a backfill would be take the low, take the high, look for some levels in here. Look at a 30, look at a 50% pullback and see if you want to position for a run to the highs again. But it's just that's a lot of movement in not a lot of time. So a little sideways activity. I'm just not chasing this thing. I had a ratio spread in here when we sold off in April, and that was nice little income trade, and that was it. I didn't buy the shares. I didn't go hog wild on owning. I just did a lot of options. Google, still fine. I've got a ratio spread 105 by 100. Ratio spreads to the 150 made money. I had a 135 by 130 made money. I'm dollar cost averaging into the share. So if we come back up to the highs at 200, I'll probably close it. Meta, I was hoping we get a pullback here. We didn't. This one's probably going to creep up to all-time highs. Microsoft is at all-time highs with divergence and over bought conditions. Same thing. Do we just end up filling up some of this gapping? This low to this high. Do we end up pulling back in any way, shape, or form? Maybe a little shakeout and some profit taking. Who knows? But I still think it's a buy. Netflix just off the all-time highs. Nvidia, just keep grinding towards this 150 to 153 handle, I suppose. Tesla, a lot of volatility the last couple of weeks. I mean, Trump and Musk not playing nice last week kind of spurred a big sell-off. We're kind of settled right back in between. We'll see how this goes. I still think this is a good-looking stock as far as premium. I own the shares. I'm selling calls. My break even is down to like 230 right now. Like 230, and I own the shares, so I'm just hanging in there, selling covered calls, rolling covered calls, and I'll continue to increase my profit potential or lower my cost basis. Berkshire Hathaway, I mean, we did pull back a little bit. I don't know why the market's not loving this. This is down 11% from the recent highs. It's almost down to the same lows we had from the April sell-off. It's expensive. It would be an options trade, but let me see what fair market value is for BRK. So Berkshire B. Forecast decline in earnings, sitting on a bunch of cash, as we know. 13 times price to earnings, which, think about this. Like, if this is essentially a reflection of the S&P, I mean, Berkshire is sitting on like 20+% of their total assets in cash. Price to earnings, that seems somewhat cheap. Okay. I mean, fair value 837. It's like, that's way different. So, compared to Amex, Visa, MasterCard, I don't know if that's necessarily the peers, but it's pretty cheap price to earnings. So point is, do I want to own shares of this? Not really, but could I do something like war in Iran is imminent, bears for commodities? Does it actually happen? Are we going to war? I don't know. If we go to war, is it bearish for commodities? We've had conflicts for so long, I couldn't even tell you when the phases are of war. You'd have to look in like the 90s during like the Persian Gulf. I don't even know. So, not really. If you look at the commodity index, you go Bloomberg commodity index. So here's index futures. We're off the lows. That's not really what I want to look at here. So commodity index. So here's a decent one. It's off the lows by, maybe 10%. Off the lows by 11%. We're getting some pretty good rips. If you look at futures, some of these commodities have taken off. Where's some of my futures positions? There they are. So that's bonds. So bonds a little bit off the lows. There's Aussie, Euro, Pound. Here you go. So here's Palladium. Palladium, well off the lows. That's a good little move there, about 25% off the lows. Here's Platinum, just freaking nuts to the upside. Way off the lows by about 40%. Corn, maybe it's going to take some time. I wonder if this is a head and shoulders pattern here. or a crown pattern. Maybe this is going to set up for a wedge and actually corn gets out of a bull market or a bear market. This has been in a multi-year bear market. Topped in 2022, trend line break. It just maybe. So I don't know. I mean, if I position for corn here, I mean, obviously I'm not in a huge rush to say like buy corn, because if it was at 360 or 320, I'd say yes. But I don't know. I would say just wait and see if this wedge breaks. Soybeans, kind of the same thing. Multi-year bear market. Do we start to see soybeans take off and catch up? Here's wheat. Same thing. Multi-year bear market. Like, I don't know if these are primed and ready to go, but they're certainly cheap. No, I didn't. I'm not in EuroCAD. Cocoa futures still trading in this giant, messy, volatile range. We'll see what happens. Here's platinum. This is PPLT, an ETF to trade platinum. This thing is just ripping higher, up about 40%. So that's a good way to get some of the spot price love on platinum. This is commodity, global commodity. This is global commodity. So again, commodities to me are kind of in like a longer term bear market that hasn't really broken yet. So I don't know. I mean, if this actually is happening wartime wise, let's see what it does. Is this just another misdirection? Is this I mean, what are you going to do when it's wartime? Pass a tax bill? Why? Because it's national security. It's like, it's just a misdirection if we do something. But I would just hope in 2025 we don't have to go to freaking war. Oil bullish if war happen. I mean, if it's in the Middle East, then yes. If it's, I mean, I think a conflict with China over Taiwan would be that's a different type of war, because that would be in the tech space. I think if you're talking about taking ownership of Taiwan, and you've got Taiwan Semiconductors, which outside of, I mean, all the NVIDIA or all the semiconductor plays the last 2 years have been just super popular, and SMH and SOSXX, they've been ripping like crazy, right? So I mean, off of this uh, April low, it's like all I did was did ratio spreads, did credit spreads, but they have bounced back pretty nicely. So I'd say for the war situation, I would wait. Quantum stocks, I'm not chasing quantum. I know there's a couple out there. They were high flying, then they crashed. I'm just not there yet. So honestly, I've said this before. If you have studied the markets at all for the last 30, 40, 50 years, if you are an individual stock picker, you can have some great runs and some explosive gains. But I tend to be the trader that likes to participate in the entire market like a haystack. So I buy the S&P, I buy the Nasdaq. I also deal with way less drawdowns. If the markets are down 10, 15, 20%, that's a fantastic buying opportunity. If an individual stock is down 15, 20%, that's just getting started. Stocks can go 30, 40, 50%. We have 60, 70, 80% pullbacks. We've had stocks that have gone, I mean, look at this year. Palantir was up, pulled back 40 plus percent, 50%. Carvana was up, HIMS was up. They all had these massive pullbacks, right? That's a lot of volatility. And if you go out like 10, 15, 20 years, a lot of those leading stocks don't last more than, like a 5-year cycle. It's rare to be on top of the food chain and stay there for a decade or more. That's why Mag 7 has been so special, because it has been, growth of tech. And I mean, the US is essentially a tech-based economy and service-based economy, and that's it. So tech is where all the margins are at, service is where people are working, and service is what consumption is. If you're not buying goods anymore, you're not buying physical things, you're paying for experiences. It's still consumption. People are traveling, people are paying for, services. That keeps the economy greased. So anyway, I just don't like to pick and hold individual stocks, because if you're holding them longer term, yes, they can run and they can be fantastic, but man, they can also go to crap real fast. And then there's nothing you can do. It's like as soon as the popularity or the major flows are let out of them, then they can turn to squat. And that's never a good position to be in. All right. What else? I got a webinar here at the top of the hour, so I'll let you go in about 5 minutes. Any other charts you want to take a look at? Vidin, do you have any quantum stocks? Do you have any tickers you want me to take a look at? I mean, personally, I don't have a ton. So there's a couple that were thrown out there, but I just haven't chased them because they were like straight up out of nowhere and then straight down, and then maybe they're bouncing back a little bit, but I'm just not there. All right. What else? Another glance at the heat map. 9 minutes for the close. Uh, Pepsi, Monster Bev. I'm trading in Celsius for my pinch point scanner. Utilities. A lot of green in utilities today. Sector performance. I think I have that in here somewhere. Sector performance year to date. S&P is up 2.3. Communication services making a big comeback again. This is Google. This is Meta. This is Netflix. Heavily weighted in the sector for that performance. Consumer staples. More defensive, I suppose, versus discretionary. Energy still flat, getting a little run on oil right now. Financials pretty steady. Healthcare, UNH caused a lot of disruption in the healthcare space, but I still like Johnson & Johnson. I still like Pfizer. There's some good value plays there. Industrials, really surprising to see it leading the sectors right now, but it is doing well. It's still, weighted heavily in a couple of spots, so just pay attention to that. More like defensives like GE Aerospace, RTX. I'm really surprised that Uber is in the same category as Caterpillar, Boeing, Honeywell, railroads. John Deere, it's like Uber is a very different company. For Uber, for example, I would be mindful on Uber if we start to see Waymo or we start to see robo taxis and they start to get a lot more popularity. I wouldn't be surprised to see some type of, I don't know, because maybe Uber does adopt them. Maybe you can still get an Uber, but it's a driverless taxi. I would think that'd be smart. I know that Lyft has been talking about that, so that's part of the reason I was owning shares because it's way cheaper. I bought shares of Lyft around $11, so it's still up a few bucks. I'm trying to see if there's some follow through here into the 18, 19, 20s. But Uber's obviously been a pretty good household name, and it's the verb. I mean, now you're I'm going to call it Uber as opposed to like rideshare. But anyway, I'm in Lyft. I've done a bunch of ratio spreads on Uber. It's been pretty solid. This I think end of the month is going to be some robotaxi stuff on Tesla. So we'll see. FICO, is that Quantum or is that just the credit score company? Fair Isaac Corp. Is this like FICO like credit scores? So a $1,780 stock. Not that interested in this. Swiss. Watch gold, Sarah. I mean, honestly, like I think the Swiss, we have a bunch of rate decisions next week as well. So next week, I'm not sure if they're expected to cut, but if I go to next week, we have rate decisions from the Fed on Wednesday, from the Swiss National Bank on Thursday, from the pound on Thursday, and I'm not sure if there's going to be additional rate cuts. Does the Swiss cut to 0? Does the pound cut to 4? The Fed's not going to cut until probably September. I don't know if much of this has changed on the watch tool here. Ratings for, I don't know. You want to trade a rate? I don't know. Trade Moody's, I guess. Trade S&P. But just looks like a bunch of noise to me. Here's the Fed watch tool. Let's go to probabilities. So next week, Wednesday, Fed's going to do nothing. 97% chance. It's pretty much baked in. No rate decision. July 30th, end of the month. This gets that little 90-day tariff window, so maybe things get rattled out a little bit through end of June into early July through the holidays. Fed is likely not going to be cutting. The discussion, I posted this in this is my theme yesterday in the thumbnail. There's possibly going to be like a hidden Fed chair, which is Scott Bessent. So, Jerome Powell is likely not coming back to the Fed when he's done in May of 2026. Scott Bessent sounds like he's going to be potentially the man in charge. I don't know if that's going to be like a aggressively dovish Fed all of a sudden to make sure that Trump and Republicans get what they want as they try to run the economy hot through the year and midterms. Honestly, it would look no different than what Biden did. Just nobody liked Biden because he was 80 years old. Well, guess how old Trump is? He's going to be 80 years old. He's one of the oldest sitting presidents. But okay, so we run the economy hot. We have a K-shaped recovery, or maybe it turns into an E, so it goes for something like this. Right now, since 2020, it's been K-shaped recovery, right? The Trump administration tried to get it to shift into this. So we're trying to, help the lower, while also at the same time you're certainly helping the higher. And I just watched this really good video. I think it's Professor G is the guy that's pretty popular on YouTube, but he had a great couple of sound bites on just um, how this country is watching how people like weaponize the government, weaponize the tax code, and more concentration gets into the top. This big beautiful tax bill is not doing much to help the bottom. The bottom 99%, the bottom 90%, the bottom freaking, it literally is the bottom like 99%. I mean, the top 1% of wealth has so much, and it just continues to feed and feed and feed. And this tax bill is definitely going to benefit them more so. We'll see. But it's really at the end of the day just adding more spending. This is a lot like 2020 minus a crisis. We kind of self-inflicted wound crisis with the trade war, but that was just a big shakeout and rattle. So anyway, back to the Fed. Probability that in September we're going to experience the first cut, and then the next one would be December. So that's your two potential cuts this year. We'll see if Powell, echoes this next week. So September rate cut, and possibly by the end of the year. What's inflation do? To be determined. We printed 2.4 headline CPI this week on Wednesday. Market didn't seem to care. We did have highs yesterday. We're just off those highs today. But September is likely going to be the first cut. Does it get more dovish than that? Not really. Going into 2025, the Fed path is expected to be low threes. So, yeah, it's really like the Fed's been kind of boring. Trump has pivoted hard. I think the market gets shaken out a little bit if we, turn on this. Like if this trade war window just doesn't really happen, or we have July and it's like, well, hey, what about this 90 days? It's like, well, we're still negotiating. We're going to go out another 90 days. Does the market take that with positivity, or is the market like, yeah, we know that's happening? That's why a lot of this good stuff is happening anyway. It's just more melt ups. I mean, literally look at the last couple minutes. There's an 8-point move coming in the SPX right now. Look at these last couple minutes. We talked about this in daily profit play. I mean, this market, it just gets so wild at the end of the day, the last like 5, 10, 15 minutes. It's so challenging. Like, again, if you're trying to, do something in holding trades, especially, short premium at the end of the day, you just get a lot of crazy action. So, I mean, it could be noise here. We're closing out in 2 minutes, but this is why I don't like to hold trades. So if I'm out for the day, it's like I want to be out when it's, noon, 1, 2 o'clock. So the only trade I'm holding is here with a 6,000 bull put spread. So 6,000 was a sell put, 59.95 was a sell put, and that's safe for $100. And we're closing out here in just 1 minute. So I'm gonna let you go here. Appreciate everyone being with me. Hit the thumbs up button, support the channel. Algorithm loves it. Appreciate the comments. Everyone commenting on YouTube, that's always good. Let's see here, 4 p.m. Eastern time webinar will be a daily profit play. I've been running master classes for my pinch point scanner for the last 2.5 weeks. We have another class tomorrow. If those of you are interested, want to jump in, pinch point scanner. One of the best tools I've ever built. Why? Because it just spoon feeds me great trade ideas. And the last 2.5 weeks, I've taken 24 trades. I mean, it saves me a ton of time. It finds me great trades that are primed to move. And all I have to do is make sure that the option prices play out the way I want. So good stuff. So, all right. I will see you tomorrow. If you're coming to the 4 o'clock webinar, it's in my Telegram channel right here. So we'll jump right into it, and I'll see you tomorrow for some of the live sessions. Wrap up the week. All right. See you, everybody. Thanks. Bye.